Welcome to ISE's Equity Index Weekly Outlook, a weekly outlook on ISE and other industry indexes, hosted by Patrick Ceresna, a derivative market specialist and investment manager with extensive expertise in options and the broader derivative markets. ISE trades options on more than 15 proprietary sector indexes, as well as broad-based indexes and a variety of licensed benchmarks. ISE continually enhances its trading systems and develops new index options products to provide investors with the best marketplace and investment tools to trade smarter.
Hello and welcome to the ISE Equity Index Outlook for January 16th, 2012. This is Patrick Ceresna. As always, we start off a chart of the S&P 500 using that SPDR exchange traded fund symbol SPY. We have hit some substantial overhead resistance as we attempted to break to a new high above the 129 level on the spiders. There is some substantial overhead resistance as we've now reached this target level. At this stage, we believe that even if there is one more pop higher, almost all the immediate buy price action should actually be contained pretty much at the 130 level or lower, and likely with the reversals that we've seen over the last few days are likely to see a consolidation period. And what I want to emphasize here is that we don't believe that this is going to begin any new a robust sell-off. It will probably, if there is one big sell day, that maybe 3 or 4 spider points, it probably will be something that will be accumulated. In general, these consolidations could last anywhere from 1 week to even 2 weeks in duration, but more than likely that consolidation will be a buying opportunity to as the market will resume back in trend to not only retest these current levels, but eventually potentially make it all the way back to even 135, 137 sometime in February or March. And nonetheless, we remain relatively bullish this market for this juncture, and even though at some stage in the bigger picture there will probably be a sell-off, it's likely not to be coming off of this level. Next year, we're going to take a look at the ISE US Regional Banks Index, which is symbol JLO. The regional banks have just continued to plug higher the way we were anticipating it to move. They've now fully reached the top end of our 22 to 2250 first target zone on the upside. There is some overhead resistance here, but the regional banks are doing a phenomenal job holding up here. Overall, just like the S&P 500, we were anticipating there should be some overhead resistance, even if it does make a quick thrust up towards 123 and finds overhead resistance and immediately returns back down. It's likely that we see some sort of consolidation. More than likely, if you are given the opportunity to buy the regional banks index with it down around the 21 level, it probably will be another really good buying opportunity for that index to continue higher. Next year, we're going to take a look at the ISE Syndex, which is symbol SIN. This is an index of all those casino, tobacco, and distiller companies. The Syndex has broken to higher highs, but really we're in the same boat here as many of the other indices. While we certainly have room for maybe a test of the 135 level on the upside on a positive push, but overall we anticipate some sort of profit taking to kick in at some point. But overall, any profit-taking cycles that do begin here again will probably emerge as a buying opportunity on that Syndex. When we take a look at the ISE Home Builders Index, which is symbol RUF, we've seen a phenomenally strong move kick in no sooner than we were identifying those key support levels around that $7 area. And really at this stage, this now is a very distinctly bullish breakout on those home builders. At this stage, again, there probably will be a breather as it may come back to retest the 8 to 810 area, where just slightly around the bottom end of that focal point we have drawn on there. But overall, it's quite possible that any pullbacks here will still remain buying opportunities. The home builders probably are destined for a full retest of those highs in the 910 to 950 area that were put in all the way back in June and July. Next year, when we take a look at that ISE Natural Gas Index, which is symbol FUM, we were distinctly concerned about the sustainability of any strength in the natural gas index. And really, that has really played out to fruition. Natural gas prices continue to drop, and this sector continues to dog a little bit. At this juncture, any break of this 105 level would actually be one of the few very bearish charts that we have to really look at. At this stage, natural gas index may not make lower lows, but there certainly is nothing positive to say about it. If the support levels do hold here, maybe they may work its way back to 115, but anticipate far more range bound to actually downtrending markets in the natural gas index. Finally, I want to take a look at the ISE Mini FTSE 100 Index, which is symbol UKX. And just like the S&P 500, the FTSE has been taking a little bit of profits up along these top levels. At this stage, it's developing some sort of a consolidation point. We remain relatively bullish all the global indices, particularly more industrial-based ones rather than resource-based ones. Nonetheless, the FTSE has room to recover even further, and if it does actually break this flag to a higher high above 570, there is room for us to see 600 or even 610 on the upside of the FTSE going into February and March. That was your ISE Equity Index Outlook. Thank you for joining me.
Thank you for participating in this week's session. Please join us again next week. For more information about Patrick Ceresna and to sign up for free index options trade alerts, visit www.optionsource.net. To learn more about ISE index options, visit us at www.ise.com/indexoptions.